Looks like we're live. Welcome to another Properties and Beers. Today we're going to be talking about truth versus trend, why waiting might actually cost you more than investing ever will. So a little bit about me and why we're here. So I'm Gaurav Gupta, CEO and founder of Ethical Property Investments. We help everyday Aussies build high cash flow ethical property portfolios that do good and make money. Because I believe wealth isn't about how much you have, it's about how intentionally you build it. And tonight we're going to cover, a huge mindset shift. A couple of items: why we're waiting for the perfect time why waiting for the perfect time to invest might cost you your future. How to tell the difference between fear and fundamentals, and a little bit more about the NDIS SDA market. And let's chat about that in just a moment. But before we get started, if you've been here before, you know what the deal is. And if it's your first time here, welcome, welcome, welcome. Today, we're going to have a whiskey dry and lime by And. Let's give it a go. And if you're joining me with some beers, welcome, and let me know what's going on. Everything on my computer just went dark. Let's change the. There you go. It said night shift was on. Fix that. So, guys, this is delicious. Whiskey dry and lime. No sugar, no gluten. 4% alcohol. Not bad. Now, usually when you get a whiskey premix, it's really average, with the exception of course, CC. I've got to say, whiskey dry and lime, I'll be getting you again. Well done and welcome. Welcome to the family, whiskey dry and lime. Now, if you're here, whether it's recording or live, drop me a line, say hi, ask me anything. This is kind of an ask me anything session. Beats just talking to the screen over here. So while we're waiting for that, though, while we're waiting for that, and before I get started with the main content, I usually get asked, Goro, what about interest rates? Like, that happens in our boys' Facebook groups all the time. What do you think is going to happen to interest rates? Well, I believe since we've entered, effectively a per capita recession, two things are going to happen. We're going to see a downward trend on interest rates. In fact, I would not be surprised if we see another interest rate drop. I believe there's a 70 to 80% chance of that on the next RBA meeting in, I believe, is it August when they're meeting next? And so in August, I wouldn't be surprised if there's a 0.25 drop. Because we have entered a per capita recession. What that also means typically is that the property prices grow. And, that leads me on to the next part of this, which is about truth versus trend. And don't wait your future away. Wait till people go, oh, we're out of a recession. It's a great time to buy. In fact, those are probably the worst times to buy. And here's the thing. If you wait for a perfect market, you'll wait forever. Because here's the truth. Most people don't get priced out. They talk themselves out of the market. And they also confuse media trends for property fundamentals. And they lose years of growth, because if you talk yourself out of a good deal because, hey, we're going through a recession, et cetera, you know what? One of the assets that grows the most in a recession, with the exclusion of, metals like gold, is actually property. And so a lot of people don't know that. And the fear comes into the market, which is really interesting, because the smart investors know that's when it's a good time to buy. So here's the thing. Every week we hear, should I wait for interest rates to fall to buy? And here's the thing. Following the headlines could actually cost you more than any interest rate ever will. So let's ask a better question. Would you have invested in Sydney in 2011 if the media told you not to? Well, that'd be silly. And so just along from there, it was about 7 years ago, I was actually featured on the ABC 7:30 report on a docu called House of Cards, where they claimed the housing market would crash very soon because prices were too high. Now, let me ask you a question. If you had the chance to buy 7 years ago in whichever place you live in, how many properties would you have purchased? Right? It's not would you have purchased property, but how many would you have purchased at that point in time in 7 years ago money? And so here's the thing. Smart investors know that trends fade, but fundamentals compound. And last week we spoke about compound investing. Hot markets cool, but smart strategies grow over time. And here's the thing, waiting doesn't guarantee safety. It often guarantees missed opportunities. And I'll repeat that again because that's really important. Waiting doesn't guarantee safety. It often guarantees missed opportunity. And that's why it's important not to try to time the market, but time in the market is more important in real estate. I'm sure some of you may or may not have heard that. You know, and I'll talk about smart investors because a smart investor looks past today's noise to find tomorrow's opportunity. Are you? Are you a smart investor? Because that's what it takes to be a smart investor, to look past the noise and go, okay, where do I think it's going to happen tomorrow? And as I said before, you don't need to worry about timing. You don't need perfect timing. You need clarity. So let me show you a 3-step way to filter out the market noise so you can invest with clarity. Number 1, ignore the headlines. Track long-term demand drivers. And about headlines, I was featured on news.com.au a couple of years ago, and I saw these crazy headlines with stuff I'd never said before. And the content in the articles was good, but the editors obviously changed the headlines to get the clickbait happening. So step number 1, ignore the damn headlines. Number 2, focus on income and growth potential, not your emotions. If you're investing with emotions, maybe you should look at buying a house to live in. But if you want to invest in property as an investor, look at it with, effectively you look at it as, a knowledge of finance with bricks and mortars thrown in. So you've got to really focus on your income and growth potential. And number 3, act on strategy and not speculation. There's a lot of speculation out there, and we have to be careful. We're not speculating on growth, but we've got a strong, solid strategy about where are we in the next 10 years, not where are we in the next 1 year, right? Because here's the thing, trends sell fast. Truth builds wealth slowly but surely. Now, I'd rather work with the truth rather than the trend, right? And as we used to say in some of the stock market stuff that I used to do, the trend is not your friend in some cases. Now, most people don't fail in property because of the market. They fail because of hesitation to invest. And here's the thing. If the headlines made you rich, journalists would be millionaires now. How many rich journalists have you met? My guess is probably not that many. And that's why it's really important to stick to strategy and work with people that have actually been there and done that and can help you make your strategy rather than what a headline says, right? Now, before I go into the next section, any questions? And I know I've covered some content. I'm going to have some more of this whiskey and dry. It's quite good. Usually, we've had some hits and misses. Last week's and this week's has been pretty spectacular. This week's is quite nice. I definitely get it again. So the next thing I wanted to chat about is within the NDIS, we have specialist disability accommodation, and there was a massive report released a couple of weeks ago, and I spent hours and hours actually going through the content to see what was relevant and what wasn't. And something became really apparent to me, and that was the SDA gap. There is an SDA gap and the mindset it takes to solve it. And I'm going to reel out some numbers here, which is going to be I think some really hard-hitting numbers which help you understand, which is, for example, one of the first numbers I looked at the data, it was, there it is, 131 million in SDA funding went unused last year because the right homes didn't exist. That's roughly about a third of the SDA income still available for the market to cover the gap. And that's not with them increasing the SDA. That's with SDA as it currently stands. Now, we're not just talking about SDA marketing gaps. We're talking about human need. There are currently over 9,000 Aussies with SDA funding still waiting for the right home. And here's the thing. We've been talking about SDA oversupply, and a lot of people have been talking about that. I want to break it down a little bit. SDA oversupply is a myth. It's not a supply issue. It's a postcode problem. And here's what most investors don't realize. It's not about building more. It's about building right. And some suburbs are overflowing with the wrong supply, while others are still in crisis mode. And before we go into it, we have to remember that behind every unmet SDA is a person with a disability without a home. So I'll rephrase that again. behind every unmet SDA is a person with a disability still without a home. And that's really important to know before we look at investing in this space. And it really is important to know that, if you're just reacting to headlines or waiting for guarantees, you're going to miss the opportunity to solve this problem. And the more value we add, the more money we make. We know that's a law of reciprocation. That's in The Secret. It's in, whether you go to Tony Robbins or any other personal development, they say the more you give back, the more you put out, the more value you add to society, the more value it adds back to you. It's a cycle, right? Because here's the thing, trends fade. Fundamental, like unmet demand, are what matters most. Similar to what I said earlier, we shouldn't be following the trend when it comes to SDA. That's what happens when there becomes an oversupply in those areas and a massive undersupply in the area where people with disabilities genuinely want to live. And here's the thing, what I know about smart investors in funds is that they don't follow what's trending. They look at what the local demand is. Are the designs fit for purpose? And partnering with the providers that truly know the space. And here's the thing, this isn't speculation, this is strategy with purpose. And here's how I feel about it, right? What's better than a rental income? Well, rental income with a real world impact. And I'll share with you a small story. I was out at one of my properties today that is built for SDA, and it was the first of its kind that I know of with actually a villa attached to it. So it's bound to have some great income. But it was great while we were there to actually see the person who wants to move in's care team, or one of the care team members actually there, and saying, hey, is this house going to be suitable for the people we want? And we looked at the things about making the house functional and talked about more about what functionality means in the house rather than just building it in an area. And here's the thing, because we knew where the area was when it comes to tenanting, we know that our investment can help make a massive impact. Because even after, and so here's some stats that I will cover on the webinar that I'm going to be doing next week. But if you want to know more, we're going to be running a webinar next Thursday. Here's an example of some of the stats we're going to run. Now, I've already talked about 130 million unused SDA. That's 130 million per annum SDA funding that's still yet to be billed to the NDIS that's unused. So we're actually undercapitalized in SDA, unlike other markets. Now, the other thing that's really interesting is that even after, say, we've currently got about 13,000 homes and another 15,000 being built all across Australia. Now, you'd look at those numbers and go, hey, that's an oversupply because there's only 20-something thousand worth of residents with SDA on their plans. And if you looked at those numbers overall, you go, holy shit, there's a problem with SDA. Until you break it down. As soon as you break it down, you find out what the truth really is, because that's the headline. Remember, we talked about, going beyond the headline. There is still, according to the data and research, between 20 to 30% shortfall in some areas for SDA. Now, where are those areas? Hey, I'm not going to tell them to you right now. You're going to have to attend the webinar. I'll put a link in the comments below. If you want to know more, join us for the webinar next Thursday at 6:30, and I'll back. Alrighty, sorry for that interruption. My internet decided it would cut out. I had to go straight to my hotspot, and hopefully you guys can all see me now. So apologies, guys, for going offline. I was just covering what we're going to cover on the webinar. So here's what's going to do. We're going to talk about on next Thursday's webinar. That's 6:30 p.m. Melbourne, Sydney time and Brisbane time. We're all in the same time zone now. Number one, how SDA investing actually works, and talking beyond the headlines. Number two, what most investors get wrong and how to avoid it. And number three, how to start with a strategy that's profitable, ethical, and impact driven. And here's the thing, I've got to ask you this question. What if your next property investment could actually change your life and still build wealth? Well, that's what this is about. And so, of course, we've only got, we like to limit our webinars. So we have limited spots. Save your seat now. I'm going to drop a link in the comment, or, just drop me a line. Say, drop me a message saying, hey, I want to come to the webinar, and I'll send you the link your way. Because here's the thing, the best investors don't just watch the market. They learn how to lead it. And that's really important to know. So before we go further, I'm going to, crisis averted. We're still online. If you're watching, welcome back. We had a little technical glitch. Here's some closing thoughts. There are two kinds of investors. Number one, those who wait for certainty and lose time. And number two, those who act with clarity and build wealth. There are two ways to respond to the market. Let fear write your plan, or based on the truth, values, and future-ready fundamentals. This is Property MBAs, where we cut through the noise, build with integrity, and always, 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 always lead with purpose. Do good, make money, repeat. Cheers, guys. Thanks, and have a fantastic day.